So, good morning, guys. So, this is Saturday. Have a good day. Have a good day, all for you from all over the world. So, watch this video and make this weekend very useful. Okay. So, after watch the video, if you have any doubt, we can do one to one. So that one to one make useful for you because you can solve your problems. You can solve your confusions in that one to one. So before one to one, please watch the full video. Okay. So let's get into the video. So in this video, let's get into the higher time frame directions and lower time frame entries. Okay. So in yesterday, I have given you an assignment. Before finding entries, please strong on the direction, higher time frame direction. So that is the very important, right? So before two classes and three classes, we are talking about the external range liquidity and internal range liquidity, right? So still you have doubts on external range liquidity and internal range liquidity and spotting the entries. So let's clear all these in these videos. So once again, welcome to the session. Okay. So let me start from yeah, sure. So let me start from higher time frame direction, and then low time frame entries, and then time frame alignment. Okay. So we will cover these three topics in this video. So hope in this video will be very useful to you. So let's get into the videos. Okay. So first discussing the higher time frame directions. We will start our bias from higher direction, which is we have start our bias in higher time frame direction. We mentioned here higher time frame direction as weekly and daily. Okay. So when the month start, we must consider our monthly direction too. So keep it monthly when the month will be started. Okay. So these three directions of higher time frame directions, we look for our bias. Okay. Lower time frame for entries, we will look for H1 and M30. So these two time frames for our entries in lower time frame. Okay. So in higher time frame directions, the price move like three types of moves we have. Price move into three types of directions. Three types of direction, which already I have teach you that price move external range liquidity to external range liquidity or external range liquidity to internal range liquidity or internal range liquidity to external range liquidity, and we have this one too, internal range liquidity to internal range liquidity. Okay. So you all know that external range liquidity will give you uh, reverse in price direction. Okay. So this will give you reverse in price direction, and external to internal range liquidity will give you retracement. So this will give you retracement move, and internal range to external range will give you continuation move. Okay. And internal range to internal range will give you accumulation. Okay. So study this before starting into the direction. Okay. So in this type of directions, we always concentrate into like continuation and retracement. Okay, so we will always concentrate into like internal range to external range liquidity. So this is the thing we will concentrate for big moves and sometimes external range to internal range. Okay, so we will concentrate on retracement and continuation. Okay, these types of two moves we will concentrate here. Okay, so before confirming the higher time frame direction, you will start always with weekly, right? Weekly, daily, and monthly. Okay. So how the retracement will start? How the external range liquidity? How we determine the external range liquidity has been taken? We know that all external range liquidity or swing highs or swing lows in bullish direction in bullish like in bullish market in bullish market, external range liquidity or swing highs, right? So this we called as external range called liquidity. What is swing highs? Swing highs or previous day high and previous week high and then previous monthly high. Okay, so these called as swing highs, what we called as external liquidity. Okay, so these are external liquidity in bullish market. And what is internal liquidity? I told you that internal liquidity or IRL, which is the false structure between swing highs and swing lows. Understand, the fall structure between swing highs and swing lows are called as internal range liquidities, and it may consider as order block or FEGs. Okay, so these types of patterns called as internal range liquidity. So internal range liquidity, note, internal range internal range liquidity milestone for retailers. So whenever the retailers think a zone to buy, that is called as internal range liquidity. There will be a support zone, there will be a order block, there will be a FEG, there will be a Fibonacci entries, whatever the people consider a zone for a buy, that is called as internal range liquidity. It need to in between the swing highs and swing lows. Okay, so these are internal range liquidities in bullish market. The same like that in bearish market. In bearish market, external range liquidity or swing lows. Okay, it considered as previous day low, previous week low, previous month low. These all as external range liquidity in bearish market. Same like as internal range liquidity. So after that, you need to concentrate on, we have uh, sorry, we have like this a bullish structure here. So this is a bullish structure here. Okay, so we know that after after taking swing highs, so this is we called as swing high, right? So this is swing high, so this is we called as swing low. Okay, now, I know that we have many members, we have doubt on this one. Like, In this swing I consider this candle as previous weekly candle. Okay, so consider this as previous daily high or previous weekly high. Consider this as previous daily high. Okay, so when the next candle, when the next candle sweep this, sweep this, we called this one as external range liquidity has been taken out. We called this one as external range liquidity has been taken out. Okay. Now, what do you called this one? What you called here this low? What you called here this low? What do you call this? We called as external range liquidity or internal range liquidity. Just to think about it. If this high, I mean, if this high was taken out like this, okay, what we called this low, what we called this low, external range liquidity or internal range liquidity. It is previous daily high, it is previous daily low. So many people have a confusion. What is this? This external range liquidity or internal range liquidity? It is internal range liquidity. Why? It is the structure between swing low and the swing high. This is the false structure to make the retailers to buy from this zone. Okay. So if the previous day high was taken out, now the target was previous day low. So we need to target like this. It means we need to target, let me tell it. We need to target to this low, which we called as internal range liquidity, which we called as internal range liquidity. Okay. So after that, let me tell it. After that, price started to pull upside to external range liquidity. You can understand clearly. Don't get confused. If you have any doubts, please watch the repeat once again. Once the swing high was taken, the target was internal range liquidity here. What is internal range liquidity? It is the structure between the swing low and the swing highs in bullish structure. So if we consider the previous day high as swing like external range liquidity, we called the swing low as we called the candle range low as internal range liquidity. Understand? So here, let me delete all this. So here what I mentioning here is if the candle high was taken like this, if the candle high was taken like this, you know what is our next target? Our next target was this previous day low. So here the price just came to take this previous day low like this, and it is heading to the external range liquidity, which is this previous day high. Understand? So this is daily, and you need to clearly understand about this one. You know, after taking previous day high or previous weekly high. So after taking Okay, so after taking this one, the price is heading to here. Okay, so our target is here. Okay, we cannot buy in this area because our higher time frame target was this one. You know what many people doing when the price reacted like this, we have something key level here. They started to buy and they will wait for to target up to here. No, the price will just pull back and it will give you retracement to here because our higher time frame target was this low. So before knowing higher time frame direction, you cannot enter into the trades. You have a whole valid setup like you have like this key level, like this key level. You have H4 to break out like this. You have H4 to break out like this. Okay, and then you have a clear apex level in H4. You have clear apex level in H4. You know what price to? Price will react from here and it will get into here. Why? Because our higher time frame target was upside. So before knowing higher time frame direction, your lower time frame A plus setup also get failed. Don't forget that. All all A plus setup. What is we call as A plus setup? Like this one. High time frame key level, we have broken structure, we have apex level, we have all thing clear. And then we hitting stop losses. Why? Because our higher time frame target was higher than this key level. So before entering into your trades, please you need to understand your higher time frame direction. You understand here what I'm mentioning? So after reaching our internal range liquidity, after taking internal range liquidity, we can look for our entries into external range liquidity up to here. Okay. So how to find entries? Here many people have a big confusion. How to find entries? We have lot of key levels. How to find entries? So finding entries. So this topic, finding entries. Okay. So finding entries, we have we have direct entries and confirmation entries. We have two types of entries here where we need to take direct entries, where we need to take confirmation entries. Okay, so when the price reaching our internal range liquidity, like here, okay, so we need to find entries. For entries, we need to find key levels. Okay, so here, let me tell you, we have like this situation. Okay, we have like this situation. So consider this. This is higher time frame. This is higher time frame. Okay. So this is the situation. Okay. Assume this is the situation. The price came to reach our internal range liquidity. So this is internal range liquidity here. Okay. So when you have like this setup, you don't have any key levels nearby. We have our key levels on this area, which is so far. So in this situation, I choose direct entries from the open close key level, which is nearby the internal range liquidity. Okay, I will choose direct entries. Why? Because this internal range liquidity my previous day high or previous week high. Okay, I don't have any key levels nearby this liquidity. I have a only key level, which is this open close key level. So in this situation, I take a direct entries with 20 pips stop losses. With 20 pips stop losses, I target to the external range liquidity like this. Understand? So where I use a direct entries, I use a direct entries in. So this is direct entry. So when my previous day high or previous week highest internal range liquidity, I have a nearby key level like this open close key level, and my another key level was so far from this area. In this situation, I use direct entries. And then I use, we have, okay, so we have liquidity here, we have the apex level here. So in this situation, I use my direct entries here, like 20 pips stop loss. I will target to this area. So this is called as internal range liquidity. Okay, internal range liquidity. So don't forget that these are higher time frames, like daily time frames or weekly time frames. Okay, my entry is daily time frame entry, which is direct entry with stop loss of 20 pips, not more than 20 pips. If my stop loss was below than 20 pips and my entry was a daily apex level or daily open close key level, which is nearby this liquidity, I will take this as my direct entries. You have clear idea? You understand that where I have take my direct entries. Okay. So in this situation, I take my entry as direct entries. Okay. So after that, confirmation entries. So confirmation entries where you need to be take your confirmation entries. So where you take your confirmation entries, you have a menu soon. Like when we have a liquidity like here. Okay. So we have a many key levels. Like we have, so this is internal range liquidity here. Okay. Here we have a QM level, which is a valid key level. Here we have a apex level, which is this apex level, which is a valid key level. This is key home level, which is valid key level. We have internal range liquidity here. So in this type of situation, you will take a confirmation entries. So how to take a confirmation entries? Here there are many confusion for you. So you know how to take a confirmation entries. Wait for the price to reach the key level. So when the price reach the key level here, when the price reach the key level here, okay, some people wait for the price to close in H4 time frame. So types of confirmation, you need to know the types of confirmation. Types of confirmation entries. Okay. So types of confirmation entries. So the first people wait for the price to close below the key level. So this is the QM. So this is the QM. So after the price reacting from this key level, they will wait for the candle to close. After the candle close, they will go for the lower time frame like 30 minute. They will see the sweep, the breakout structure, and the retracement will be their entry in 13 minutes. In 13 minutes, the price will retracement, right? In retracement, they will take entry. Why they take in 13 minutes? Because their level was, the stop loss level was very low. So they will take like this. Okay, they will wait for the sweep. They will wait for the breakout structure. You don't wait for the inducement to form. If the inducement was formed, that will be the perfect entries. You know, if we have 30-minute inducement here and we have 30-minute key level like this area, so this type of entries, very confirmation entries, you will get the bigger stop loss, the bigger risk reward ratio in this type of entry because your entry was 30-minute, your target was the higher time frame key level. So in this type of entries, you will get high risk reward. Okay, but many people, they don't wait for the inducement because the H4 candle is already closed below the key level. So that is the confirmation. So they will wait for this sweep. They will wait for the breakout structure. When the price came to retracement, you can take your entries like this. You can take your entries like this. You can put your stop losses in the high and you can put your target height. So this is a types of confirmation entries after the candle close. Okay, so we need to know what is before the candle close. So many people wait for like this situation, like when the price when the price they reach the key level here when the candle just triggered, not closed below. When the candle just triggered, you know what you do after the candle was reacting from it, you will go for H1 time frame. H1 time frame. So this is daily key level. So this is daily key level. Okay. So this is our internal range liquidity. So this is our internal range liquidity. Okay. So this is our H4 candle, which is reacting from this daily key level. Okay. So when the price was triggered, not to close, when the price was triggered this key level, we will go for a lower time frame like H1 time frame. In H1 time frame, I will wait for, let me show you. So let me track this line. Okay. So it will track this line. Okay, so consider this line as daily key level. Okay, so when the H4 candle was triggered, I will go for the H1 time frame and I will see the price. So I need to see like this formation, like this engulfing formation after reaching H4 time frame. Okay, you can understand what I told you. This line is daily key level. Okay, this line is daily key level. After reacting, after triggered H4 candle, after triggered this key level, you need to go for H1 time frame. In H1 time frame, I will look for like this formation, like engulfing formation. I will take my entry as this area. You know, I will take my entry as this area. So I will wait for the next candle, the third candle to be a inducement candle like this. Okay, it won't to be react our key level. It need to be closed below like this. So after that, I will consider that as inducement candle. Then my next candle will be my entry, which is like this. So this is the type of confirmation I will do when the price triggered, not closed, when the price triggered in my H4 in my daily key level. Okay, so this is the first type of confirmation I will look for. Then the second type of confirmation, you can choose what is suit for you. Okay, you don't need to follow the exact entry type. You just do your backtest and see what is the best thing for you. Okay, so the next thing, when the price, okay, so the price, okay, so when the price give like this situation, after reacting the key level, then it will give the strong bearish engulfing candle like this. When you have an open close key level like here, I will take my entries like this. So the next candle or the coming candle will be the inducement like this. Okay, so inducement candle like this. So after that, I will choose my entries as like this. So this is my another type of confirmation entry in lower time frame, which is H1 time frame. Sorry. Okay, so here I will give you my entry like this, and I will target up to this low. So understand what I'm mentioning to. So these are my types of confirmation entries, which is I will look for. Okay, so I have another confirmation entries, which is the price reacting to the key level like this. When the price reacting to when the price react the candle reacting to the price. Okay, so once it trigger, we will go for the lower time frame, right? In H1 time frame, I will wait for, okay, so I will choose my entries like this. So this is my other type of confirmation. So I have three types of confirmation when the price just trigger from your high time frame key level. Okay, you just need this thing. Okay, so backtest this. This will clearly help you. We will get inducement like this and we will get entry like this. So these are my types of confirmation. Okay. So these are my types of confirmation which will very useful for you. So backtest is it will always helpful to you. So let me so if someone need this as image, let me save it and I will share in my channel. You can use it, okay? So types of confirmation entries, so types of direct entries. So here we have, okay, I have saved all images. So if you have any doubt, you can ask that images. Uh, you can refer to that. Okay. So these are the things. Okay. These are the things of this lesson. So just learn first, then do practice, then only you have a doubt. Okay. So after you have a doubt, just note it out. Then ask me for one to one. So let's do one to one. So that will be helpful. That one to one will be very useful and very effective because you will already watch the video. You have already list of doubts. So when you came with the doubts, I can explain with my reference or my explanation that will clear you all your doubts. Okay. So this is the types of video make this weekend very useful. Okay. And let me see about like what happened in gold and the major pairs. So what we can look for the next week. Okay. So let's get into the some outlooks. Okay, so this is gold weekly level. So we don't have any key levels on higher time frame. So you know why the gold trades getting failed because we don't know any higher time frame key levels. You know, we are seeing the price pushing upside. Okay, so there is no key level in higher time frame. So for that reason, the price getting stop losses because all our entries are based on lower time frames. It's okay, we need to survive in every situation, right? So gold in daily, so the price, I already told you, I already marked down this the daily key level. This is my entries but it hit my stop losses, but price closed below the key level, daily key level, right? So this is the current situation of daily. And let's get into some zoomer. What happened? Let's get into some zoom. So, so you can understand this is the high. This is the all-time high. Okay. So this is the next candle high. This is the next candle low. Okay. So the other day candle was inside the candle range. Okay. So now this candle high was taken out. Clearly understand, clearly listen. Okay, this high was taken out. What is this high? Previous day high. Previous day high was taken out. Okay, so what is taken out? External range liquidity has been taken out. This is the lesson what I teach you before few minutes. So external range liquidity has been taken out. Okay, so now what is the target? Internal range liquidity. What is internal range liquidity? This is previous day low. Previous day low. So what we called as internal range liquidity. Don't consider this as external range liquidity. This is the lesson. This is the lesson what I teach you. Don't consider this as internal range liquidity, external range liquidity. These all, this is swing low, this is swing low, this is swing high. Understand? This is swing high, this is swing high, this is swing low, This is swing low. Then what all this key level? Yes, these all key levels are internal range liquidity. This is internal range liquidity. This is internal range liquidity. This is internal range liquidity. Okay. So the price can take this internal range liquidity and get into this, or the price can take this internal range liquidity and get into this, or the price take this internal range liquidity or get into this. So these three are possible now because we have external range liquidity here. When the price take this external range liquidity straight to this area, after taking the external range liquidity, when the price take this external range liquidity, the trend going to change. Okay, understand it clearly. So what we look for the next week, the price to take internal range liquidity. So now the current trend turn into bearish because the price get into downside to take this level. So in this situation, you need to look for sells, not look for buys. You know what many people do? They will wait for, they will go for lower time frame. Let me tell you, they will go for lower time frame. Okay, so they will mark like this. So they will mark the lowest liquidity. They will call this as plug and play. They will call this as plug and play. They will target here. They will take entries here and they will target here. You know what will happen? The price fall down, hit their stop losses. They will take buy from this area. You know what other people do? They will they will take buy from this key level here. Okay, let me delete all this one. Understand how the higher time frame areas is playing out. Okay, this make your stop loss hit. This make you think what happened, I do all thing correct, but why my stop loss will be hit. Wait, what they do, let me tell you. You can see in coming days their chart. They will wait for this fresh key level. They will consider this lowest liquidity. They will take long entries from here. Okay, they will put stop loss here. They will target up to here. You know what the market do? The market makes them fool. It will came like this. It will give reaction here. It will give reaction here. It will give H4 breakout structure here. They will wait for the confirmation entries here, but it will hit their stop losses. So understand the higher time frame key levels, understand the higher time frame directions. Wait for Monday, monitor the trade Monday, and you came to know what I will say that. Okay. So this is the the length video. Actually, it came up to 1 hour, I think. So please watch the video. Okay, so after the video, we will do one to one. So have a good day, guys. Practice more, practice more. Practice makes you perfect. So don't forget to backtest. Always backtest what happened. You don't want to backtest what happened on last year, what happened on last month. Just backtest what happened last week, what happened last month, what happened last day. So this is the backtest of current trades. So always preview your current trades and see where you have done a mistake and note it down and journal your trades. That will give you the clear view where you are doing a mistake, where you are a very strength. So that will show you a strength and weakness. So don't forget to journal your trades. So I hope this video very useful to you. So if the video very useful, so please let me know the appreciation. Okay. So your words makes me to do more. So have a good day, guys. Thank you.